Today, I'm gonna tell you about an absolutely fascinating job where at the higher levels, you'll regularly meet with the CEOs and CFOs of large companies and make as much as pro athletes and celebrities, but without the annoying paparazzi following you around. This is Kyle with Fundamentals of Finance, back with my next video in the series about careers in the financial industry. Today, I'll be covering analyst and portfolio manager, including what they do, what their career progression looks like, how much they make, and how you can break into the business. To me, this is the most interesting career path in this series, and it's also the most lucrative, so let's dive in. If you go through a Google search of the richest people in the world, it'll start with founders of large companies like Elon Musk of Tesla and the Waltons of Walmart. But as you scroll down, you'll find dozens of multi-billionaires with professions like investments or hedge funds, and these are portfolio managers. Of course, not every portfolio manager is a billionaire, but for a successful one, making well into the millions of dollars per year is not out of the question. But I'm getting a bit ahead of myself. Let's first get into what analysts and portfolio managers do, and as I weave in some of the different types, I'll mention how much they make, because the variation can be pretty significant. If you've been following this channel, you've heard me talk a lot about mutual funds. Well, analysts and portfolio managers are the people who make the investment decisions in mutual funds, or hedge funds, or ETFs, or any other kind of investment vehicle. There are two main differences between them. First, an analyst tends to be more focused on a particular area, while a portfolio manager is more of a generalist. Analysts usually research companies in a particular sector like technology or a region like Europe in search of the best companies to invest in. It works similarly in bonds, real estate, commodities, or pretty much any other type of investment. Since there are lots of regions and sectors, a portfolio manager will often consider the investment ideas from many different analysts when they're building out a diversified portfolio. So one analyst may be able to recommend tech companies, and another analyst may only be able to recommend energy companies, but the portfolio manager can buy tech companies, energy companies, financial companies, or whatever. That leads me to the second difference, which is compensation. This isn't universally true, but generally portfolio managers make a lot more than analysts. After all, in the example I just gave, there might be 10 analysts on a mutual fund and only one portfolio manager. And the portfolio manager is making all the financial decisions. That's why they make more, and why most analysts hope to become portfolio managers one day. Within the analyst role, there are two broad types: sell side and buy side. A sell side analyst works for a third-party company and sells their research to mutual fund or hedge fund companies. A buy side analyst actually works directly for the mutual fund or hedge fund company, i.e. the one that is buying the companies on behalf of their clients. Sell-side analysts often start out with a base salary in the $100,000 range and can earn bonuses of around the same amount. Often they earn somewhere in the range of $250,000 to $300,000, but if they stick around, it can certainly go up from there. Many of them don't though, and for reasons that are probably too in the weeds for you to care about. The sell-side analyst is a bit of a declining industry. It might still be easier to break into the business on the sell side, but eventually, a lot of the good sell-side analysts end up going to buy-side companies, like mutual fund companies or hedge funds. As a buy-side analyst, there isn't a need to sell your research. You often don't have to work such crazy hours, and your compensation is often more variable, but usually higher. Buy-side analysts actually get to see their recommendations get implemented in client portfolios and are often compensated on their results. Most of them make somewhere between $200,000 a year and $1 million a year after their bonus. But I've heard of some buy-side analysts making over $10 million in a single year. So it's possible if you're at the right company and you really crush it. Most of the time though, analysts aim to become portfolio managers, which make a lot more money at most places. There are some companies like Capital Group where the analyst is more of a career position and they actually make their own investment decisions, and in those cases, they can earn a more similar amount to a portfolio manager. But at most places, they are only making recommendations, not buy and sell decisions. And so they don't earn as much. It's the portfolio managers who are considering all the recommendations of the analyst and making the ultimate investment decisions. If they're good, they can earn many millions of dollars per year, or in rare cases at hedge funds, hundreds of millions. If they're not good, they'll probably never make that much and eventually get fired. Analyst and portfolio manager are the ultimate job where your results speak for themselves. It's not like being an athlete where you might have the skill, but not the size or physical traits that they're looking for at the next level. Or you're saying a corporate job with all the politics and limitations. You said to buy this company. Were you right? The answer will be very clear in the end. If you're right more often than you're wrong, you'll be a very hot commodity, and the upside potential is almost unlimited. Breaking into the business is not easy, but there are lots of ways to do it. I already mentioned that the way to become a portfolio manager is to be an analyst first. So here I'll focus on how to become an analyst. You'll almost certainly need a college degree. And if it's in a finance, economics, or data science related field from a top business school, that will help you a lot. Good Excel skills are also crucial, and on the sell side, you'll also need to be able to write well, since the job is basically analyzing industry trends, company financial statements, and then writing research reports. You can get a job as a sell-side analyst or maybe as a buy-side analyst at a smaller company right out of school, but it would definitely be helpful to have passed at least 1 or 2 levels of your CFA or gotten a top-tier MBA first. As I mentioned in my prior video, investment banking can also be a path to analyst, and there's another more junior position called research associate that can also be a good stepping stone. Research associates typically support a couple analysts and do a lot of the data-heavy work for them, like building Excel models to project out future company profits. The last path, which is probably the best but also the hardest, would be to get into an analyst training program at a reputable buy-side company. Example of this would be the CAP program at Capital Group or the Associate Analyst program at T. Rowe Price. The spots here are usually very limited, but if you can get in, it's one of the best ways to break in as a buy-side analyst at a reputable firm and get your career on the fast track. So there you have it. To sum it up, analysts and portfolio managers are the people researching companies and deciding which ones to buy within investment vehicles like the mutual funds that most of us invest in through our 401ks or IRAs. It's an absolutely fascinating job where at the higher levels, you'll regularly be meeting with the CEOs and CFOs of large companies and make as much as athletes and celebrities, but without the annoying paparazzi following you around. If you haven't seen them yet, be sure to check out the prior videos in this series where I covered the CFA versus MBA, financial advisor, and investment banker. And hit that subscribe button and stay tuned for the final video in the series, which will cover wholesaler, the $500,000 a year job you've never heard of, which by the way, is also a lot easier to get into than analyst or portfolio manager. And if you want to know the 9 habits you need to become a successful investor, check out the link below in the description. Thank you for watching, and I will see you in the next video.